Okay, so I get it. There is thousands and thousands of different strategies out there, all using different concepts, confluences, and foundations. But the problem is they use too many steps and they're too overcomplicated. So in this video, I'm going to show you our 3-step lazy strategy that fucking anyone can do on a day-to-day basis, and it proves to perform extremely well. It's reliable, flexible, and overall it's efficient. So the strategy itself, it has a set time window, it's a fully mechanical setup, and we've got over 5 years of backtested data using these 3 confluences, which I'm going to show you today. So strap in, because I'm going to show you the exact strategy that I use on a day-to-day basis and what's helped me to scale my accounts rapidly. So the laziest 3-step trading strategy. Now we're going into a new year, so it's going to be a whole new set of data, but what I'm going to show you is the data from 2022 to 2025. I'm going to go through everything, the rules, indicators, everything that you need to get set up and start trading this today. So firstly, the rules. Our time window is between 8 AM and 10 AM. So this is easy. Full London session, if you're based in the UK, that is 8 AM till 10 AM. If not, just figure that out on your trading view. You just do it by adjusting your UTC. And then we've also got 1 PM and 3 PM, which is New York time. We're going to do 2 trades a day maximum, whether that's a win or a loss, and then set alerts for confluences rather than sitting on the chart. So the reason it's so lazy is because we don't actually need to be sat staring at the chart for hours and hours waiting for all these confluences. It is that mechanical. All we need to do is set alerts and then come back when them alerts are tapped. So it has to hit all 3 of our confluences. So if one doesn't hit, we don't take the trade for the day. We don't do ifs or buts. We take it fully mechanically. We wait for these confluences to show. If they do, we take the trade. And then from there, the pairs that I personally trade, which you can test on other pairs, I have people commenting, messaging that they say they trade it on NAS, US30, whatever. I trade it personally on Euro USD and GBP USD. So the indicators you're going to need, I'll put a pop-up on screen of each one with all the settings. We're going to need Lux Algo sessions, which is basically going to be our session time frame. So Asia session, London session, and New York session. We need a vertical timelines. It's not too necessary, but this is basically going to show us our time window on chart so we can see when we can trade and when we can't. And then our Fibonacci retracement. But like I say, I'll put all these on the screen so you can see all the settings. We also do make videos about these on our Instagram, so if you haven't already, make sure to follow our Instagram, and you can see we post 2 reels a day, giving loads of informative content. So, step 1, previous session sweep. Effectively, what this is if we have an Asian consolidation, so I'll just draw this out, bear with me because I'm quite slow with it. We have Asia session here. Now, what we want to wait for is an external sweep of liquidity, and one form of liquidity that we use is a session sweep. So, in this example here, we have now swept the Asian lows. Here is our sweep. So, we swept the liquidity for the Asian lows, and this is our first alert. So once these lows have been swept, we can start looking for entries to the upside. Like I say, it's completely mechanical. So if we sweep the lows, we want to wait for a shift to the upside. If we sweep the highs, we want to wait for a shift to the downside. So we've swept the lows, and that is the first confluence done. It is super simple. That is all we wait for. Sweep the lows, done. Easy peasy. Now the second confluence is a shift in market structure. So say, like I said before, I'll just go on that bigger version of the pen. We have swept the lows, we've come into London, we swept the lows. We now want to look for a market structure shift. We broke structure to the downside after the sweep, so the sweep occurred here, and then we had a break of structure to the downside. From there, the last higher low then got swept above and caused a market structure shift. Now you can call this market structure shift, change in character, change in state delivery, whatever you know it as, they all mean the same thing. But there's 2 rules. For a market structure shift to be valid, we first have to break structure. So I'll just write this on a note. So we have to break structure first, and it must be a solid body close. So the candle that closes above this high has to be a solid body close. It can't just be a wick, because then we can consider this an internal liquidity sweep. The more momentum to the upside, the better. So we want to see a strong shift up, which I'll show you on the charts later on anyway. But as for the shift, this is what we look for, and these are the rules that we use. So step 3, a fib retracement. So you already have the settings set, but effectively what we look for is after the sweep, which I'll just draw here. So we had a sweep. We now want to look for a retracement into these areas. So what you have to do is we draw our fib from the bottom of the market structure shift leg, which is here, and we draw it all the way to the top. Now, if price was to go and peak, then come back down and then move higher, we still only draw our fib to the first highest point. So before it does a pullback and then it goes higher, we still only draw it to this first peak. And then from there, we wait for a price to retrace back into these areas. And we expect price to either react off one of them, they can react off the 786, it can come down into the 0.7 or the 618. So it can retrace from any of these values, but I'm going to show you how to take from the appropriate one within each trade. So they pretty much are the 3 steps that we use to take an entry, and this alone is completely mechanical and you can take a trade using this, but there is an extra step that we do use, which is called an SNT. Now, I've already drawn this out so I don't have to be slow, but effectively an SNT divergence is where one pair will take the lows, whereas the other pair won't, but they have to be correlating pairs. So for example, Euro USD and GBP USD, these are both correlating pairs. So as we can see in this example, we've come down and Euro USD has taken the low, whereas GU or GBP USD hasn't taken this low. Now they're both at the same time, they're between 8 and 8.15, so just check this on your chart. But this is a really good confluence because if the leading pair, which in this case is Euro USD, has already taken the lows and we've pushed higher, that means that GBP USD doesn't actually have to sweep these lows and it's most likely going to continue to the upside. This is because they're correlating pairs and they tend to move in the same direction. It's a really, really valuable step and I use it in a lot of my entries. People don't really use them enough. I've noticed I'd say the past half of the year, they've played a massive, massive part in my trading. If EU takes the lows and GU doesn't because they're correlating pairs, it's most likely going to go up either way. Now this can work in reverse as well, so GBP USD could sweep the lows and EU doesn't. Whichever has the most momentum at the time and shows a reversal quicker, that is the one that the other pair is likely going to follow. So these are effectively the steps that we take in taking a trade. Super simple. A sweep of liquidity, in our case is Asian range, so a sweep of the high or the low. We then wait for price to have a shift to the upside or the downside with a solid body close and a break of structure beforehand. And then we wait for our fib retracement, which we draw from the bottom of the market structure shift leg to the top or the top to the bottom. And then we also have an SNT. So it is a super foolproof strategy and it is so lazy because literally you can set an alert at Asian lows to wait for the sweep to happen. So you get an alert, come back on the chart, then boom, wait for your, put an alert at your peak, set an alert there so that when price shifts and takes that low or that high, you get an alert to see that you've got a market structure shift. And then from there, you draw alerts at all of your fib levels. I just draw mine at the 618. And then from there, you get an alert when you are at entry. And then you just take. It is so mechanical. And because you're off the chart, it stops you thinking about it and adding these confluences that you really don't need. So, but now we have to look into narrative and the trade management. So TP targets and stop loss placement. So previous session high or low is a good take profit target. So if we sweep the lows of Asian range, Asian highs is a good target for price, especially if we've had an expansion during Asian range. Previous daily high or low, that is also a good target for both your stop loss and your take profit. So what we like to see is if we are working around the previous daily low or high, we usually wait for a sweep of that alongside Asian session as well. This is just a stronger confluence. So if you are working near the previous daily low or high, make sure to see for a sweep of that too. And then external higher time frame swing points. So check on the 1 hour, check on the 4 hour, and add in these areas where price can probably draw to. Imbalance areas as well are a good target. So a 4 hour fair value gap, a 1 hour fair value gap, whatever. If the 618 doesn't clear the low, move entry down to the 0.7 or the 786. So what I was saying on here about we could tap into the 618 or the 0.7 or the 786, there is different places that we take trades from depending on where our stop loss positioning is. As for the trade management overall, we target simply a 1 to 2. I've spoke about this in my other videos. You don't need anything more. So as for the stop loss placement, if, for example, the market structure shift leg low is here and we place our entry at the 618 and we don't clear the low, this is a low probability setup. Due to the data that we've tested, it is likely that we will come into a bit of drawdown when it gets to 1 to 1. Now, this is completely normal. But if we clear the lows and we've gone over a 1-to-1 risk to reward, we simply just reduce our stop loss by 50%. So like here, we reduce from 10 pips to 5 pips. Simple, reduce by 50%. I personally believe that break even is bullshit unless you're running at least 1 to 3. The 50% rule I like to use. But yeah, if we can't clear the lows on the 618, we then move down to the 7 or the 786. And as long as we clear these lows, we're all good to take an entry. But yeah, so that is pretty much the whole strategy in a sense. It is so simple, literally using 3 to 4 steps. It's so lazy, I use it every day. It's made me consistently profitable. I've got multiple payouts using this exact strategy. I'll post them up on the screen now. But yeah, if you are looking for a strong strategy, this is definitely the way to go. Okay, so I've come on the chart and I'm pretty much just going to show you some examples. And as you can see already on the higher time frame here, we have a lot of entries pretty much playing out day after day. So let me just simply go on the 5 minute and I'll go through all of these entries and I'll show you. I won't go in replay mode because it's slow. I can just show you them as here. These are all entries that we send into our Discord. So if you aren't in the free Discord already, make sure to click the link in the description. There's loads of free resources in there, including a journal, this full strategy playbook, and a lot more. So make sure you join that. This was an entry from yesterday. Again, breaker structure, market structure shift with momentum, solid body close, retracement into the fib area, and we targeted a 1 to 2 smash take profit. Day before that, market structure shift after a breaker structure and a sweep of Asia, placed our fib from the low to the high. Again, 1 to 2, absolutely smash take profit. This entry here, this one included an SMT, sweep of Asian lows, breaker structure, shift to the upside. We drew our fib retracement leg from the low to the top of this high. Obviously, like I say, with this one, we took off the 618. We also had an SMT, smash take profit. Day before that, this was a London into New York trade, but it's the exact same concept. Break structure, changing state delivery or market structure shift, SMT, fib retracement, take profit hit. Day before that, we actually had a loss, but the problem with this entry is we had a breaker structure and a market structure shift to the upside, but we also took the Asian highs as well. So when you take the Asian high and the Asian low, that does decrease the probability of the entry, so just keep that in mind. Day before that, we had a sweep of Asian highs into an area, market structure shift to the downside, retracement into the fib, and we took an entry. Again, day before that, little entry, bit different of a model, but I will go into order block soon. Day before that, again, this was a really nice entry. Pretty much zero drawdown on this one. Again, break structure, SMT, market structure shift, fib retracement, TP. And the list just goes on and on. I could go back months and months and show you every single trade that I take with this. Like I say, I send every entry idea into our Discord. But yeah, that is pretty much it. There's not too much to it. There isn't these crazy confluences that you need to be looking for because you don't need it. So if you're looking for a strategy to start the new year, it's going to be fresh in Q1. I think it's going to play out really fucking nice. We've got an average win rate of 76% on this strategy. If you're looking for a strategy, make sure to like the video, save it, send it to your friends, whatever, and get using it. And I promise you, you'll scale so fast. But yeah, make sure to like, subscribe, use all the free resources in the description, and that's it for this video.